Welcome to All About Stocks. You're watching ET Now. This is a show meant specifically for those of you who want to invest in the market for the long term. Now, we had a good week on the markets this week. The Sensex and the Nifty saw their biggest weekly gain since November last year. And as the market surge, we'll find out what your investment strategy should be. And if there are any stocks right now that you should be adding to your portfolio that will make money for you in the long term. We'll also answer as many questions as we can. And remember, our email ID is at the bottom of your screen. And you can send in any question you have about your stocks. First, let me bring in Ajay, who will give us an update on the markets and how they performed this week. He'll also tell us what unusual movement we saw in some specific stocks. Ajay.
Well, Faye, it's been a very interesting and quite profitable week for the traders who have been in the long in the market, because Nifty has been knocking at 6,300, has gained around 2% this week, mainly led by large caps. Broader markets were relatively underperforming this week, so composition of the market was tilted towards the large caps in interest rate sensitive sectors like capital goods and banks. IT also supported the market, but it was mainly the cyclicals which were really outperforming the market. Traders say that there's a pre-election rally which is underway and momentum may continue going forward in the next week as well. Also, one of the biggest reasons is the return of FIIs back to our Indian markets. In fact, for the entire week gone by, almost on a daily basis, we've been getting buy figures from FIIs in the cash segment, which has been the big growth driver as far as Indian equities are concerned. Going forward, analysts say that the Sensex earnings estimates, which have been upgraded by a couple of brokerages like Motilal and BNP Paribas, may actually gather momentum, and they are recommending the traders and investors to remain constructive on the market even going forward. Well, a couple of stocks which deserve attention. One of them from the pharma pack, Dr. Reddy Labs. That particular stock has been trading at fresh lifetime highs, and most of the brokerages, when we speak to them, have a target of over 3,000 rupees per share. Ever since we've seen US FDA tightening its noose around select pharma companies, especially from India, the trader attention and investor attention has been focusing to very few companies who have been able to manage these issues well, and DRL figures in that particular list. Macquarie, one of the brokerages, says that the US business of DRL is outperforming right now, and it is really leading the growth. Not only that, from the outperforming side, Infosys also made fresh lifetime highs this week. In fact, Narayan Murthy, who is back at the campus, has been attending a lot of investor conferences and have been giving very bullish commentary regarding the changes which are underway. They also emphasize a lot on the cost-cutting measures. In fact, the wage hike this time around at Infosys has been much lower than what the industry was estimating, and all this translating into good positive sentiment regarding that particular stock from the trading community, stock making fresh 52-week highs. On the downside, though, one stock which has been ailing is Maruti. That particular stock almost fell to fresh 1 month lows this particular week, because the investor and the trader community are not really convinced by the clarifications put out by the management of Maruti India regarding the benefits of the plant and in Gujarat being owned by Suzuki, which is a Japanese firm, and the arrangement which they have between themselves. We also hear that some of the funds have been trimming exposure to Maruti after that particular clarification was put out. Nomura, for one, says that there's a possibility that Maruti India as a company may be reduced only to a trading company going forward from a manufacturing company, and that too with a stagnant kind of a growth scenario. That was one of the reasons why this particular stock was languishing this week.
All right, Ajay, thank you for that update. Joining us today, Prakash Diwan, Director at Altamont Capital Management. Prakash, thank you so much for joining us. Interesting week at the markets. What does this mean really? Because every week we see different analysis coming in. Some say that the economy is going to do well. We've heard all of our political parties now talk about infrastructure. It's the most often used word. What does this mean for those of us who've invested in the market, who are watching it move up and down right now?
I think it is really a state of confusion. I think right from the people who govern us and the country and people who invest and support it. And essentially what's happening is, in the absence of any domestic triggers, we've started looking at global cues to seek direction in terms of where to head, what to do in the market. But I think till the time we are through with this election bogey of sorts, this is going to prevail in various shades, various trends. But for an investor, I think it's going to be a very, very important time to start buying into stocks once markets ease out a bit. Be ready with cash, have the gumption, convince yourself that you need to invest, And when the time comes, you could probably have certain days where the market could lose about, in a week, let's say 10%. And that's the time you need to be ready to buy in. So I think we are in for those kind of days. There's no euphoria building up yet. One speech from Narendra Modi and we start feeling the BJP is looking stronger, and the next day you feel it's not. So while all those things happen, you need to look at fundamentals, be focused onto the stocks and the sectors that you're comfortable with, and for valid reasons, and not get too carried away with the noise that's all around.
What if the election outcome is not what you would hope it would be? If we have a really, really fractured mandate, and that's one of the possibilities, we'll see the market take a pretty sharp cut. And,
yes.
then
So when that happens, you need to be ready to invest, but you need to know where to invest already much beforehand. So what I meant is, I'm definite that we are in for a sharp cut of 10, 15%. 15% seems really, really significant at this point in time, but it could happen once it starts, it could deepen. And you need to be ready with stocks which have absolutely no bearing in terms of what the government formation takes place, what kind of a trend.
give us an example of what a stock like that would look like.
Let's look at a pharma company which does R&D, which starts looking at global markets, which is looking at a pipeline of approvals and patents to go through. Would a third friend be able to stop its business in Europe or the US? I don't think so. Would a BJP-led government make things easier? Maybe slightly, but it's not going to change.
US FDA would stop that business.
But then you don't have control over that, so you would assume that the US FDA is much more saner in terms of predictability.
That's not a vote of confidence for our government. But, while picking up a thread of what you're saying, so what you're saying basically is, since the market is anyways now looking overseas for global cues, does it make sense then for us to be looking for stocks that do business overseas? So you're looking for fundamentally export-oriented stocks?
Yes, they would stand out, and that's one of the reasons why IT just refuses to go down. I mean, you look at IT, we had doubts on valuations. So you just wanted to accord higher valuations to a TCS, Infosys, HCL Tech. Then he said, okay, the second-tier companies also deserve, the gap is too wide. NASSCOM comes, announces a fresh round of guidance. It says this is also going to get revised in the future. So, everything starts looking positive too soon. So what you need to do is make sure that before they turn positive, and then while it's, as they say, it's darkest before the dawn. So things may not be great for some sectors at this point in time, but they will start blooming, they'll start unfolding in terms of value.
A couple of stocks we must talk about, and Ajay mentioned this when he was talking to us. Dr. Reddy's Laboratories lifetime high. Most brokerages are now saying 3,000 plus on that stock. An example of what you were just talking about?
Yes, absolutely. I mean, I don't think Dr. Reddy's has ever been very confident of the Indian market. I mean, that's always been a byproduct of sorts, but their R&D work that they spent on in the last 2 years has started paying off. DV's Lab, another classic example. There's smaller companies as well who are focusing on the services part of the pharmaceutical space.
Give me a call first before we move on Dr. Reddy's. For those of our viewers who are holding Dr. Reddy's right now, does it make sense to hold it even longer?
Oh, absolutely, absolutely.
Yeah.
I think this is
you see 3,000 on this stock?
Possibly. I mean, 3 is more of a psychological barrier or mark or whatever, but I see some very robust moves by the company in terms of operational efficiency and scale.
Does it make sense to buy now?
Yes. See, because you're not going to get the same thing from a Ranbaxy or a Sun Pharma with the same pace. So you need to, it's the, Dr. Reddy's is the Tech Mahindra of the pharma space.
But the other stock we must talk about, and since you mentioned Tata Motors, is Maruti. It's had a really disappointing run this week. But if we're going to compare Tata Motors and Maruti, for the investors who are watching, what would you recommend they do?
I definitely wanted it to, be re-rated downwards because it's no more a global play as much as Tata Motors is. So this is exactly divergent of what Tata Motors is trying to do. They're getting India to be a bigger and bigger play in terms of their global supplies and benefit the stock. Whereas here Suzuki comes and says, we're going to do the same thing, but, hey, Suzuki is going to own this and not MSIL. So if I'm an owner of, do I have a choice to own MSG, which is Maruti Suzuki Gujarat? If the answer is no, then I don't benefit with all that story.
Does it make sense to sell out of Maruti right now?
If you've not, you should, because it's going to get tougher for them to they are one of the highest margin payers in the country. In all multinational arrangements, Maruti Suzuki is one of the highest. And every car that MSI is going to sell, Suzuki is going to get richer, not necessarily you as a shareholder anymore. So, and there's going to be severe competition in that space.
All right, let's talk about Infosys, 52-week high. Every time people dust off that stock and say it's done, it's never done. Does it make sense to hold on to Infosys? You know, should we be booking profits right now? Do you think there's far more steam left in the stock than earlier?
You know, I think it's probably, you know, sputtering into these highs because of the kind of management, you know, commentary that comes through, the assurance that comes through. But if a stock always needs to live up on those things, you know, it's going to get into a zone where we'll start seeing some fatigue. And my sense is if every time Narendra Modi is sharing, you know, his plans and things like that, and the stock talks up, but you know, if that means there's a lot of expectation that builds up. So you're in for disappointments when the expectations ride so high. So I think that's going to happen to Infosys. Though I have always believed that it was a better stock, you know, about 1,000 rupees off what it is today. But it's going to be difficult to continue with that momentum that they've built. And the marketplace is getting extremely competitive, where the smaller players are much more nimble with smaller teams, low-cost structures, and that's exactly where they're scoring much better than the biggies.
All right, so you're saying take money off the table now with Infosys?
You could. If you're in the money, you could, and you may get a, you know, so every time there's a sharp fall, Infosys is always one of the stocks that comes down because it's a heavy weighted stock in the index. So is Reliance and so is an ITC. So these stocks, irrespective of their fundamentals, will go with the market mood and flows. So that's the opportunity to start accumulating them at lower levels, but don't sit on it and expect that it's going to do the same thing which it did in the last 10 years.
Prakash Diwan is with us as well, helping us pick stocks for our portfolios. Prakash has brought in 2 recommendations this week that he believes we should be buying at these levels and will make money for us in the long term. His first recommendation is Gujarat Pipavav Port. Now, the stock ended the week at about 70 rupees. We've seen it do really well over the last quarter. Numbers were impressive and the stock reacted well. Tell us what you see in store for this stock in the coming few years.
You know, first and foremost, I don't want this stock to be representative of a revival in the infrastructure as my expectation. Infrastructure is a much wider theme, and this is a stock that on a standalone basis has some very promising opportunity coming ahead. You know, first, in the last year or so, it's been acquired. The controlling stake is now with a company called Maersk, which is a global logistics and shipping major. Maersk is now trying to use Gujarat Pipavav Port as one of these critical hubs for this Asia-Pacific region. And what's going to happen is a lot of loads going to be taken off some of the Chinese ports that Maersk was always focused on because of pricing that's changed dramatically there. Secondly, Gujarat Pipavav expanded its capacity in the last 18 months significantly. And at this point, they're utilizing about 30-35% of it. So what it means is if business grows, you don't need capex to come in. And that's one of the reasons why the quarterly numbers look so impressive on a year-on-year basis, because you really didn't have to spend anything else, and you could continue ramping up and everything came to the bottom line. So the return on equity is going to be very strong for the next 2 years at least. And the company also has a very high degree of efficiency that's coming in. So my sense is it's got access to easy liquidity, great capacities, great ROEs. You won't find these kind of companies in terms of the replacement value. It's significantly difficult for people to put this up. So, and everybody knows why Adani is getting into such multiples. You know, it's very clear when we talk about exports from, you know, other sectors like pharma and IT and engineering, you know, ports will definitely do well as well.
Well, it's close to its 52-week high right now.
Yes.
Talk to us about valuations. Why do you find it attractive, and what your targets are on this stock?
See, what happened is the quarterly numbers were a huge surprise to the street. So, you know, after the numbers came out, I think it's rallied 20 rupees from its 50s to, you know, 70 plus. The fact is that this is just the beginning of a re-rating of sorts. The P multiple hasn't changed, but there's a significant bump up in the EPS. So on a trailing basis, I think it's still valued at about 9 times, which is really not, you know, very significant. And I think for a MNC-owned company like this, you could probably accord about a 12 P. My sense is 100 rupees should be the fair value, and it will attain that very quickly. But in the long run, stay put. It will continue giving you a CAGR of at least about 25-28% year on year.
So that brings us to the second recommendation, Sun Pharma Advanced Research Company. This is different from just Sun Pharma. Now, this company is basically Sun Pharma's research and drug discovery company that was hived off by Sun Pharma some time ago. Now, it's purely into research with a market cap of 3,805 crore rupees. The stock has been rallying for the last 2 months. What are you expecting from it going forward?
Well, the trajectory could be slightly different for this company because it's a pure research and drug discovery based model. And of course, parented by Sun Pharma. So the pedigree is great quality. The promoters have put in significant amount of equity into this financial and intellectual both. And what Spark is trying to do is line up a plethora of drugs in the pipeline, and the kind of turnarounds that it could have is not going to be linear, it's going to be exponential. So you could have a certain month where 6, 7 of their molecules would probably get accepted, and you could have, a long chain of events like that. So, when you have something like this happen to a Biocon, you suddenly see a spike. But imagine if Spark were to do that, it could actually 5 times of that spike. And this is an investment where you could actually have 3 times of this in a year also, returns suddenly. But you need to be very patient. It's like a oil exploration business where if you strike oil, the returns are 3x, otherwise you continue waiting for something to happen. So it's a binary kind of a return, but in these markets, I think that makes more sense because there will always be demand for such businesses at some point in time.
If you're talking about that kind of waiting, that kind of risk, then out of, say, if I were to give you 100 rupees to spread across your entire portfolio, what portion of that 100 rupees would you invest in this stock?
No, I would, in any case, look at all the stocks to be with a 3 to 5 year horizon, but this is a stock that would definitely need that kind of time horizon. I wouldn't expect it to reward me in the first year itself, whereas, Gujarat Pipavav could probably reward you in the next 6 months, much more than what it could do between the second and the third year. So, that kind of non-linear relationship could probably be much more striking in Spark. So people have to look at this as an investment which you just, lock in and forget for the next 3 years, and the news will tell you that it's time to sell this stock.
2-3% of my portfolio? Easily.
I really won't worry about it because equities will have to be looked at as much as real estate in terms of waiting and patience that people have. I mean, it's surprising. People are very patient when it comes to real estate, but not when it comes to equities.
Targets for the stock?
This could probably fetch you, in the next 3 years, my sense is it could probably double. So mathematically, 180 or something, 380 or something could be easily attained, but it could be much more and much less. So I'm more interested in people looking at it with a 3-year target of holding rather than a price target, because valuations really aren't justified for stocks like this at this point in time.
All right, so Gujarat Pipavav Port, and the second recommendation was Sun Pharma Advanced Research Company. Let's take a couple of questions. Mahesh has written in, he has 1,000 shares of RIL, which he bought at 812 rupees. He wants to know if he should hold on to that stock. He's not losing any money. The stock ended the week at 800. Accusations flying all over the place here with this company. So we talked about we talked about the fact that the change in that gas pricing could mean a lot for the stock in the coming few years. But how much has this this latest piece of news changed?
This stock tends to defy logic in most ways. I mean, when there's bad news, it doesn't fall. When there's good news, it refuses to rally. So I think, but it's a great stock depending, if you look at the business model, and I think the telecom part is what's going to take this forward. So the gas price part will actually get eclipsed once the launch happens, the telecom launch happens. And that could mean the company gets re-rated on an SOTP basis with one more business added to it. So hold on to the stock. I have never had issues with Reliance in terms of this. I think about 1050 if the telecom launch happens within FY15 is very easy to achieve.
All right. Vijay has also written in, he has 5 shares of Ambuja Cements, which he bought at 140 rupees. He wants to know if he should hold on to that stock. The stock ended the week at 168. Ambuja Cements?
Early days for cement to pay off, but he's in the money. He should be happy, continue holding on, because the stock is just, the quantity is just 5 shares, so really not too much at stake. But cement will take some time to really deliver those supernatural returns that people are expecting.
Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash is still with us, and it's time to take a look at his portfolio. Now, the idea behind designing these portfolios was to actually be able to illustrate what it's like to hold a portfolio for the long term, which means that when we look at this portfolio, we know that this is what a lot of portfolios look across the country. They're probably down a little bit. Prakash's portfolio is down nearly 3%. If we compare that to the Nifty, and this portfolio was started on the 30th of November 2012, the Nifty on that over that same period is up 6.7%. I'm going to give you a recap of the stocks in his portfolio and then we'll ask him about it. There's Oriental Bank of Commerce, Tech Mahindra, that's done fairly well for us, Kane, Cipla, Coal India, ITC, M&M, Tata Steel. Now, I'm going to ask you about two stocks. First of all, Oriental Bank of Commerce. You were very positive about this. You refused to sell it for all of this while. It's down 50%. Are you going to draw a line in the sand at some point?
I would. I think the entire banking pack has been a disappointment of sorts. And, if you've seen the recent moves that the management made trying to sell part of this restructured portfolio to asset reconstruction companies, that also hasn't really met with great success. So they're going to struggle a bit more than what I thought. These moves were afoot about 6 months back, but they've taken too long to find the right buyers, and the quantum also is much lesser than what impact they need on the balance sheet. So while the P&L is kind of steadied itself in the last quarter or so, the balance sheet continues to remain slightly weak. And with capital infusion becoming a big question mark after what Mr. Chidambaram explained, 11,000 odd crores for capitalizing banks, these banks are going to struggle. So I would rather be out of banks for some more time.
The other stock I want to talk to you about is Coal India. It's down 32% since we bought it. And the reason why I'm bringing this up is because we have a lot of viewers who've bought this stock over the last few years who are all disappointed with it. They're looking at it thinking, is it time now to cut my losses and give up? Or do you actually think Coal India will recover at some point?
Coal India is one stock that needs the owners to decide on doing things and actually actioning out things, and that's the government of India, and for which translates into the fact that we need a government, and which means we need the elections to go through. So my sense is, if you've held it for so long, wait for the election outcome, see which party comes to power, what format of government we have. Once somebody starts taking decisions related to the business, otherwise it's like a company which has great assets but no management which is willing to do anything significant. So once we have a strong management or some management in place, I think Coal India should recover significantly. So till then, I think it's still a hold.
All right, so we're holding Coal India, we're selling Oriental Bank of Commerce. Yes. What would you like to buy in its place? Yeah,
so, the stock that we spoke about earlier, Gujarat Pipavav Port, when I'm so strongly optimistic about that, it should feature in my portfolio. And mind you, this is the first relatively small cap company that we're introducing in the portfolio. Otherwise, it's been largely large cap and frontline stocks. So I think this is where the alpha could come, the recovery could come from. So if Gujarat Pipavav does well, hopefully we'll start recovering the underperformance that's existing right now.
All right, so that's the change we're making in the portfolio right now. And the idea behind this portfolio is that every time Prakash comes back into the studio, which is every few weeks, we take a look at how his portfolio is doing. And it sort of gives us an idea of how to manage these portfolios from Prakash's point of view. I'm going to give you a recap of the stocks as they stand right now. There's Gujarat Pipavav Port, Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC and M&M. If you have questions about what you just heard, feel free to write to us. Our email ID is at the bottom of your screen. But that's a wrap on this show. Prakash, thank you so much for coming in and spending the weekend with us. You can get in touch with me on Twitter. It's always a pleasure to hear from you. Thanks so much for watching.